What if I told you there's a new kind of company on Wall Street that's literally printing money? Not with ink and paper, but with Bitcoin. And right now it looks like the closest thing to an infinite money machine that we've ever seen. But you do need to be careful. This just might be too good to be true. And if you're thinking about jumping in, you need to know the risks before you get burned. I'm Matt Weinschenk here at Stansberry Research, and today I'm going to show you exactly how this works, why it's spreading like wildfire, and the risks that you need to watch out for. Look, we all know Wall Street loves making stock prices go up. The traditional way was simple. You build a company that makes money, earnings go up, stock goes up. But that's boring, and it's a lot of hard work. So clever minds are always trying to find creative shortcuts. Do you remember the dot-com boom? Just add .com to your company name and watch your stock soar. In 2017, it was the same with blockchain. Same trick, different decade. Then there were SPACs in 2020. That was literally like creating companies out of thin air. But today, we've got something entirely different, something that's rewriting the rules of corporate finance, and they are called Bitcoin Treasury Companies. So this story begins with MicroStrategy. That's the company that discovered the money machine. Now it's just called Strategy, but back in 2019, it was a software company. It was profitable. It had about a $500 million in revenue and $30 million in profit and a $1.5 billion market cap, but it wasn't anything particularly interesting. But then their CEO, Michael Saylor, had what you might call a Bitcoin awakening. During a 2020 earnings call, he dropped a bombshell and said that the company would use corporate cash to buy $250 million worth of Bitcoin. Now, this was pretty wild at the time. Bitcoin's gained more acceptance in the years since, but in 2020, this was a rogue move for corporate finance. And Saylor's logic was that he figured the money printer was cranking, the dollar was weakening, and Bitcoin would be the perfect inflation hedge. And Michael Saylor actually came on to the Stansberry Research YouTube channel as a guest back in 2020 to explain what he was up to. And it turns out Saylor caught lightning in a bottle. Right after he made this announcement, Bitcoin exploded from 10,000 to 60,000 in just like 6 months. And MicroStrategy became one of the hottest stocks on Wall Street. But here's where it gets interesting. Saylor didn't just stop there. He discovered what was really a magic formula because MicroStrategy trades at a premium to its Bitcoin holding, sometimes a big premium. And here's basically how it worked. The company would sell $2 billion worth of stock, use that to buy $2 billion worth of Bitcoin, and then the stock's value would go up by $4 billion. So this is like financial alchemy. You turn $1 into $2, rinse and repeat. The more they did it, the more the stock would go up. Right now, they hold $66 billion worth of Bitcoin, and their market cap is closer to $120 billion. And the original software business, that's basically a rounding error now. This premium was volatile in early years, but now it's settled in between 1.5 and 2, and it's pretty consistent, and that's what makes this machine so powerful. And then it gets even better, or it gets even scarier depending on how you want to look at it, because once Saylor figured out the stock trick, he moved on to debt. The company started selling convertible bonds and preferred shares, and now they've borrowed about $11 billion to buy even more Bitcoin. So MicroStrategy isn't just a Bitcoin play, now it's a leveraged Bitcoin play, and that's when the stock started crushing Bitcoin itself. Now today, they own nearly 600,000 Bitcoin. That's about 3% of all Bitcoin outstanding. They're the second largest holder after the big IBIT Bitcoin ETF. And now everyone wants a piece of this action. They've seen this business model. They want to copy it. Companies are adding Bitcoin to their balance sheets faster than I can keep track. We're seeing multiple announcements every week. Some of these moves are wild. Like a Spanish company a Spanish coffee company plans to spend 1 billion euro on Bitcoin. A Norwegian deep sea mining company is going to spend 1.2 billion. So right now, there are 145 companies listed on BitcoinTreasuries.net. They hold together about $100 billion in Bitcoin combined. And then there are also companies copying the model over to other cryptos like Ethereum, Solana, and Ripple. But here's the thing. Not all infinite money machines are created equal. That premium I mentioned that MicroStrategy has, it's not guaranteed, and it's definitely not universal. Take Semler Scientific. They're a newer Bitcoin treasury company. They hold about $500 million in Bitcoin, but their market cap's only about $580 million, so barely any premium at all. And as these Bitcoin treasury announcements come out, they used to send stocks soaring, the market's starting to get tired of the trick. The reactions are getting smaller and smaller. It's like the market saying, whatever, another Bitcoin Treasury company. So the novelty's wearing off. When the novelty fades, the premiums might shrink. So there's some risk here. And here's where we need to get serious. Remember all that leverage I mentioned? Leverage is a double-edged sword, and it could create a nightmare scenario because here's the problem. If these companies use leverage, they have debt payments to make, interest payments. Now, while Michael Saylor says he'll never plans to sell any Bitcoin, but MicroStrategy has already disclosed that they might have to sell some to meet obligations. So picture this domino effect. Bitcoin falls, premiums shrink, companies need cash, so they start selling Bitcoin. That pushes the prices lower. Then when they have to sell to raise cash, they have to sell more Bitcoin. So it's the classic leverage downward spiral. Great on the way up, devastating on the way down. Legendary short seller Jim Chanos is betting on this. He's long Bitcoin but short MicroStrategy, betting that premium will disappear. But look, timing those sort of changes in the market is incredibly difficult. It could happen tomorrow, or it might not happen for years. So if you're thinking about jumping in, be careful, but I do have some guidelines for what you should look for in a Bitcoin Treasury company. So first, only consider companies that are making digital assets their main business. Adding a little Bitcoin as a side project, that's just a marketing stunt. You can skip it. Second, trust matters. This frenzy is bringing out every opportunist looking for a quick buck, so find management that you can trust. Third, the stock needs to show a real premium to its holdings. No premium, there's no money machine. And fourth, you need to be majorly bullish on the underlying crypto. These companies amplify every move. You want it to be going up and not down. So I get it. The infinite money machine is tempting, but remember, leverage is an amplifier. It makes you feel like a genius on the way up, and it can wipe you out on the way down. So if you're going to play this game, keep your position size small. This is not a rent money investment because when the music stops, you don't want to be left holding the bag. So Bitcoin Treasury companies are so interesting because they're where cryptos meet traditional stocks. So to speak more about the crypto side of this, I brought in Eric Wade, Stansberry Research's own crypto expert. He's the editor of Crypto Capital, where he's found incredible wins for readers. So, Eric, there's a lot going on here. What's the read from the Bitcoin community? Is this Bitcoin Treasury company train stopping anytime soon, or is this the new normal?
Okay, so boy, you packed a lot in there, and that's a money question. It's not going to stop soon, but the longer it waits to stop, I think the more your wisdom about leverage coming back to haunt you is going to really play out. I'd like to think that the Bitcoin Treasury companies could also be joined by sincere holder companies. Like right now, what you're describing are kind of a strategic play. And this could have been a strategic play with any asset that's out there that performs as well as Bitcoin. If Michael Saylor had said, we're going to become a Beanie Baby strategy company, and if Beanie Babies were limited to only 21 million of them would ever be made or something like that, then the same strategy would have played out, right? And you could borrow all you need. You could max out your credit cards for Beanie Babies, anything you want, right? The key is only 21 million of them ever being made, and we really haven't had any other assets that are like that. Gold comes close, real estate, you could say, real estate they can't make more, et cetera. So that's the play right now, is that it's a great strategy on the way up, as you mentioned, but what I'm really hoping for is that there will be some companies out there that don't leverage, that say, I think I do want to replace some of my fiat. Well, let's take Apple, which is legendary for holding way, way, way too much cash. And you can either argue, well, they don't know what to do with it, or they're waiting for the next big thing that they need cash for, whatever, right? All those arguments still hold with Bitcoin as well. That is, imagine if Apple, which was never going to give up its main business, which is customer-pleasing products and services. Imagine if Apple said, yeah, maybe we'll take $100 million worth of Bitcoin, but not as a strategic Bitcoin treasury company, just as more of it's better than fiat. And that could prolong it. Now I know I'm a wishful thinker there, right? Because what's hot right now is not being fiscally sound. What's hot right now is it's on the way up. let's get while the getting's good, buy every dip. We're seeing reduced volatility in Bitcoin. That's how prevalent this is Bitcoin's legendary volatility has been reduced because someone steps up and buys every time we have a dip. Okay, long talking. The short answer is I don't think it's going to end anytime soon, but I think when it does, it's going to be violent.
So what you're saying, Eric, most crypto experts try to avoid the Beanie Baby comparison, but you brought it up yourself. But I think what you're saying is, aside from these Bitcoin Treasury companies, if this just leads to greater acceptance of Bitcoin, if more companies hold just some of it as a diversifier, that could be a great source of consistent demand for Bitcoin as time goes by and keep the price higher. And when do you see the current prices of crypto being pushed up by this big boom in Bitcoin Treasury companies? Can you see that in the market?
Yeah, absolutely. And like I said, the dips are less ferocious than they typically are in a Bitcoin rally. I don't know if you remember this or not, but all previous dramatic rallies in Bitcoin came with 30 to 40% drawdowns in the middle of our bull runs. And so, of course, Bitcoin holders expect to get paid more for taking their risk and for sitting out that kind of volatility. Now you have to ask yourself, if you were the, say, CEO, CFO of a public company, and you said, we're going Bitcoin strategy, as long as it's working, you're the hero. But you remember, part of the story that you kind of quickly told about MicroStrategy, you left out the part that, yes, he bought, or they bought, and yes, it went up, but it also went down. And there were some quarters in there where Michael Saylor was the butt of every joke. It was, how'd you like to be Michael Saylor right now, sitting on a losing position? It wasn't all upside. There was quarters in there that he was going back to the company and saying, we're buying more. And at least he had the brains to do that. How would you like to be, board of directors, public company, and they commit to this, and then Bitcoin has a 40% correction? That's going to be really tough for some of them to take. And nobody wants to think of themselves as the guy who sold the bottom, but it's really hard to resist that when it's when you know that typical Bitcoin bear runs are 80% drawdowns. How many public companies do you know could withhandle an 80% drawdown on an asset that they claimed was their future? That's going to be the test. If we ever see another 80% drawdown. But my point being that Bitcoin isn't going to stop being Bitcoin just because corporations are buying it.
And that's what I like about your research, Eric. I know you're a Bitcoin believer, and I know you think it'll be up in the future, but you make no qualms about saying this thing has drawdowns, and you got to watch out for them. And that's what makes this leverage kind of scary. So from your perspective, as a crypto guy, do you have any interest in investing in these things, or do you just think people should go right to the cryptos themselves?
I like just go to the crypto itself personally. If you have a knack for stock trading and you know when you can play the momentum, etc., or maybe you watch Greg Diamond every week and you're skilled at timing it, then yes. But as you yourself have pointed out, is the fundamentals of this are starting to change. The law of diminishing returns is kicking in, and I buy cryptos because I believe they're a disruptive, important technology, and owning a company that owns Bitcoin doesn't get me access to that technology. It gets me up and down. It gives me exposure to the upside and to the risk, but it doesn't give me access to the technology. I can't. Just if owning some MicroStrategy or any of those companies that you mentioned, I can't wake up at 3:00 on a Sunday morning and send my shares to somebody else. Well, with Bitcoin, I can. And with any other crypto, I can. It's a peer-to-peer electronic currency. So you're missing out on that. You're missing out on all of the network abilities. In crypto capital, we look at, well, what can you do with it? And if you own the shares in the company, you can't do anything with it. You're just up and down at their mercy. So yeah, I prefer the cryptos themselves in the way that maybe for people who haven't dabbled yet, think of it this way. You could own Meta stock, but that doesn't give you a Facebook page to connect to your high school sweetheart or your aunts and uncles and relatives, right? There's a difference between using it, or maybe you have an iPhone, doesn't mean you own Apple stock. Or if you own Apple stock, doesn't mean you can call someone with it, right? So crypto, it's a little maybe harder for people to see. It's not just a currency. It's a technology. And owning these companies doesn't give you any access to that.
Well, Eric, I love how you really love these cryptos and love using them and take that approach. But even for just a speculator, one of the arguments for MicroStrategy's premium early on was people couldn't buy cryptos couldn't buy Bitcoin either because it was difficult or because they were an institution and they weren't allowed to. They were allowed to buy stocks, but they weren't allowed to buy crypto. But both of those, that's all getting easier. I mean, it's very easy to buy Bitcoin even through an ETF, and it's just getting easier every day. So I don't know how long these premiums will hold up, but if you really love cryptos, I mean, using them for those cool things is really fun to watch you do. So, Eric, thank you for coming on.
My pleasure.
You can all those people at home, you can stay up to date by following Stansberry Research. We produce free, high-quality research on Bitcoin, crypto, stock market, everything you can need. So sign up for free at stansberrydigest.com right now. And be sure to hit like and subscribe here on YouTube so you never miss our market insights. That's all for today. I'm Matt Weinschenk, and we'll be back next week.